This is Chase McWhorter with IREI. We're continuing our series on asset management, trying to dig into kind of the best practices, what it looks like moving forward. So today we're sitting with Steve Luthman with Hines. So thanks for joining us, Steve. If you want to just give some background on your role, and then we'll jump into the questions.
Sure, Chase. First of all, thank you very much for taking time to meet with me and your support of Hines and for everything that you and IREI are doing to highlight the importance of asset management and all things real estate. So it's a pleasure to be here. My name is Steve Luthman. I am the global head of real estate at Hines. Hines is a global investment manager. We buy, we develop, and we asset manage on behalf of our investors. We're in 30 countries and 383 cities around the world, and we're purely focused in the real assets business. My role is I oversee a team of about 4,200 people, and we're focused on identifying new investments. We're focused on property management of those investments, the engineering. We're focused on construction and design. And then, most importantly, we're focused on the asset management of those investments that we make on behalf of our funds and our investors. I sit here in Chicago, but I live on an airplane working with our teams around the world.
Well, let's start with the basics. So, how does Hines and you define asset management? And then kind of a caveat to that, even go into kind of the day-to-day of what that looks like for a global firm like Hines.
Yeah, thanks, Chase, and delighted to talk about our fantastic asset management team. But maybe I should start with a little bit of context about kind of where the industry's been and where the industry's going. For the last, decade and a half, really ending in 2022, post financial crisis, we were an industry that was really blessed with a tremendous amount of liquidity and a tremendous amount of investment in capital markets tailwinds. Those tailwinds came in the form of lower interest rates and thereby lower cap rates that really supported ongoing investments in real estate. And what that led to was a substantial amount of what we call beta.
Yep.
You buy an asset and you have the tailwinds of the capital markets helping you. And then you ultimately sell the asset and you harvest the investment and hopefully you produce the underwritten rate of return. Um, uh, Post 2022, when we've seen kind of a paradigm shift globally in terms of the interest rate environment that we're in, there's been a renewed focus on the importance of on-the-ground operations and asset management in order to drive alpha. Because as the interest rate environment, the cap rate environment have shifted, no longer can investors really rely on declining cap rates to drive their investment performance. So they've had to really look to how do you create value at the asset level through understanding your occupiers, understanding capital improvements, understanding operating expense reduction. How do you drive value through
Mhm.
hardcore asset management? And I would say, as a firm, we've always been, starting 70 years ago, we've always been a local operator. And then, we have an asset investment management platform on top of our operating platform. So asset management and execution on the ground has always been what Hines has done. It's kind of what defines us if in the minds of investors. It simply was discounted over the last 15 years. We're actually seeing that the market's now moving towards us, and they're starting to recognize the importance of having on the ground knowledge of the real estate to drive alpha and to drive investment returns. And we're seeing that in the form of mergers and acquisitions that are happening around the industry that investment managers are acquiring operators in order
Mhm.
to get that alpha on the ground. And so that industry context really frames how we think about asset management. Um, it's to put quite simply, asset management is the asset manager is the CEO of the business plan that is being executed for each individual investment we make. And what I mean by CEO is they really are driving all facets of the execution of the strategy of that asset. and that includes engagement with the occupiers, revenue growth. It includes operating expense management. Includes value creation, ideas that
Mhm.
perhaps weren't originally underwritten. It includes capital management, management of the CapEx that goes into the asset. The asset manager is involved with every single decision that's made to add incremental returns to each of our investments. And the asset managers are not just involved kind of post-closing. The asset managers are really involved at the very early identification of a new investment because we
Okay.
rely upon the data that we have in our own portfolio that the asset managers own to inform our underwriting of that investment. And so the asset manager is a critical part of our investment, and then obviously the ongoing execution of the business plan all the way to disposition.
Okay. And I appreciate you providing that context because I didn't even kind of provide more background, but even part of this series, because we're going through, I think, 12 property types overall with this series. You're going to talk about a few specifically, but that was the one thing that kind of stuck out to us was around 2024 going into 25 was just so much about how critical asset management is. So you see these research reports, and we're going to focus on asset management. And that was kind of our thought was just, okay, so it wasn't really it was an afterthought. It wasn't being applied. So that was just one of those kind of simple questions, which kind of brought this about was just, okay, we want to know across these property types, what does it look like? Um, so what would you say from the Hines perspective are some important trends shaping asset management today?
Well, maybe before I answer that question, I just can thank you for the focus that IREI is, having on asset management. For so long, the heroes of the story have been those that can raise capital or those that maybe know how to find investments. But I truly think we're moving into a cycle point where the hero of the story is the asset manager. So what you guys are doing is fantastic. I know our asset managers on our teams globally are thrilled for it. So on behalf of each of them, thank you.
Yeah,
Um,
well, it is funny. We've used sports analogies, and it's one of those things where the capital raisers, the deal guys, kind of like, let's say the running backs, the receivers, kind of get the highlights. But asset management, it's like unless you can like block and tackle, it's none of those guys can even catch a ball. The quarterback can't get it off. So that's kind of how we looked at it as a simple way is just, okay, this is kind of the blocking and tackling of real estate, where it's just you've got to manage these properties, you got to generate alpha, you've got to improve NOI. So. Yeah, I mean, it's definitely a tip of the cap to those asset managers that maybe have felt forgotten.
yeah, that's a great analogy. I mean, the men and women in the trenches each and every day that are enabling, the prima donna quarterbacks and wide receivers to get all the glory, but they're the ones that
Exactly.
are doing the hard work. Um,
Exactly.
Yeah, we have a saying at Hines that, the difference between a good investment and a great investment is asset management. And that's something that, we really believe in and we promote in terms of identifying and growing and retaining top talent in asset management. The trends are really interesting right now. I think we talked a little bit about this kind of this merger of investment with operator or investment with asset management. At the same time, we're seeing tremendous change in the technology landscape that exists. So the biggest change that I've seen over the last couple of years and is only accelerating is really the use of technology and the use of data, both from external but also from your own portfolio to make better and informed decisions and to drive investment outcomes. There's just so much data. So how we create dashboards in order to allow our asset managers to have real-time insights into kind of the behaviors of our occupiers, the operating expense outcomes. I mean, the use of data and then how that data is translated into action is really the next generation of kind of the best asset managers. They're the ones who can harness that and then put it into action. I would also say, I mentioned a little bit at the beginning, but the asset manager becoming earlier becoming involved earlier in the investment life cycle.
Yeah.
There's a term, you've probably heard it, Chase, that you throw it over the wall to the asset manager. That absolutely does not work within Hines. And I think the industry is moving away from that, where because the asset manager has so much detailed information on the marketplace and on the portfolio and what has and has not worked, that they need to be involved to make investment decisions. And our investment committee, when I prepare for investment committee decision, I'm relying upon engagement with the asset manager to understand the assumptions that are made because they're the ones that have to live with them. So earlier in the life cycle is another big trend. I would also say, maybe lastly is a deep engagement with occupiers. And the asset manager no longer is kind of sitting in a cubicle just grinding numbers and pushing out reports. The asset manager is deeply engaged with the market. I think our asset managers have more meetings with brokers, whether they be industrial or mixed use, or even the on the front lines with our residential occupiers. They really are trying to understand the occupier mentality because that's what drives the top line. And they need personal engagement with the occupier community. So we're actually promoting asset managers who have more of an externally focused mindset that can really understand kind of what drives revenue and how the top line grows. So those are some trends, that we're seeing. Obviously, the big one is technology and AI, but maybe at more of a personal level, we're promoting those people that can think and can communicate with those external occupiers because that's what ultimately drives the top line income.
Yeah. No, that's really good context. So Heinz operates across multiple sectors, obviously globally, industrial, living, mixed use. So what are the core asset management principles that translate across these sectors globally? And then maybe where do you see the biggest differences in asset management across these sectors?
Well, so I think the primary thread that crosses all of our asset managers is really execution discipline across the sectors. I mean, whether it's industrial or living or mixed use, these asset managers are responsible for delivering the business plan. We have a term at Hines that we say PIATM, performance is all that matters. And of
Hmm.
course, there's other things that matter, but as an asset manager, performance and delivering on the investment returns and the underwriting is all that matters. So that discipline is really critical. I think the fundamental difference between property types, obviously there's so many, but the occupiers are different in each asset class. So industrial, the occupiers are generally signing mid to long-term leases, and they're there for a long time, and they really are not asking for sort of day-to-day engagement from either the asset manager or the property manager. They're looking for a building that is in a great location with the right specs, with the right operating expense structure to enable them to run their business. From a residential standpoint, it's much more day-to-day interaction, and our leasing agents and our community managers are there to ensure that on a day-to-day basis that we are providing a great level of service, and the asset manager is ultimately who they report to ensure that day-to-day experience is incredible because the number one factor that drives success in multifamily is retention rates. And so
Yeah.
having people that love living there is what the asset manager is focused on. And then mixed use is probably the hardest property type because you've got competing forces. You've got retail, and you've got residential, you've got restaurants, you potentially have some office. You have entertainment, you have all these different factors that come together, and each one of them has kind of a competing objective. One of my favorite quotes about mixed use is it's like a family road trip where you've got your kids in the back seat, and the happiness of the family is basically only as happy as your least happy child. And so mixed use is kind of the same. Each property type has different objectives, and the asset manager has to make sure each one is highlighted and each one is successful because they're synergistic. So understanding the different users at each different property type and the occupier focus is really kind of the core difference between the asset classes.
That's it. Well, it was one of those things as we were kind of preparing for this and seeing mixed use on there. That was kind of a question I had was, or an assumption I had was I would think that it would be a little bit more complicated because you have those different uh, needs from residential to retail, all those things. So I'm happy you clarified that because that was an assumption I was going in with was that it would be a little bit more complicated. But I like the road trip as I've taken a few of those, and I can I can attest.
Well,
Um,
if the retail's not working, if the retail's your child that's in the back seat that's unhappy and the retail's not working, it really does impact your residential performance. And if the residential's not performing, your restaurants won't perform as
yeah.
well. And so it really does all bleed together. And the best asset managers understand those trade-offs and understand that, you may want to take a little bit lower rent over here for the restaurant because that ultimately is going to drive a better outcome in the residential and vice versa. And so
Hmm.
that's where it gets a little complicated because it's a multi-dimensional analysis that the asset manager has to go through using data, using experience, and also kind of listening to the occupiers to see, what kind of food do what kind of grocer do the residential occupants want to see in the mixed use development? What co-tenancy will that grocer provide to the other retail? If you have
Hmm.
office in the complex, what do they want to see in terms of driving recruitment and retention? All of those things really factor into that one decision
Yeah.
of should we do the lease with the grocer? And so it's a complicated multidimensional uh, uh, activity.
Interesting. You had touched on it briefly as far as a trend with technology. So wanted to dig into that more. I mean, we hear a ton about AI, how it's going to impact real estate moving forward, how it's already impacting it. So, what role does technology play in asset management? I mean, I think further context is we hear so much about maybe like the property management level, just what's happening there with, say, chatbots, things like that. We're starting to hear more about underwriting. But when it comes to technology and asset management, what kind of tools are there? What are you seeing as far as the trend? So just digging into that a little bit more, kind of the role of technology in asset management.
Yeah, well, it's a great question, and it's one that I think, all large scale firms are really trying to implement and understand how technology can ultimately make asset management better. For us, it comes down to making faster, more informed decisions, and providing real-time visibility into our performance, and then feeding that information back into our underwriting for new investments and creating that virtuous cycle.
Hmm.
That's kind of the core of how we utilize technology. I mean, I think many in the industry, and Hines is no exception, we're in the place of we've spent a lot of time and capital on creating dashboards to have visibility into our portfolios. So those dashboards are they change all the time because of the information that's we're gleaning from our portfolio, but they still are static in terms of the information that can be gleaned. And the best asset managers want to really go a level deeper, and they
Yeah.
want to be able to say, okay, the dashboard is telling me this, and that's a lot of good stuff, but I want to go a level deeper. I have this thought about how this impact that's occurring politically in my city, how that might impact my portfolio. I want to ask questions to go deeper and to use our data to, evaluate that decision, hypothesize, and then test. And
Yeah.
so I think that's the next level of asset management is really overlaying tools that release us from the dashboard and allow the best asset managers to engage with the information in new and creative ways. That's what I'm really excited about sort of this next iteration. I will say, on the other side, even just at the actual real estate level, what's happening in AI is super interesting for our asset managers in terms of driving value at our assets. We've
Hmm.
had multiple assets. One that I'll mention from in Germany, where it was an industrial acquisition, and it was a great infill industrial site that our asset management teams, went out and identified the power dynamics that existed in the local market, were able to secure power to ultimately convert that industrial building into a data center. So that's maybe a different take on your question, but how is AI and the technology revolution actually allowing our asset managers to drive incremental value in the business plan? Another example that I love is that, right now one of our leaders has used the term new companies doing new things. And,
Okay.
and what that means is that, traditionally in industrial, we've thought of, these are infill logistics assets that are providing either light manufacturing, they're providing distribution, and they have either long range logistics, or they have infill sort of last mile. What we're starting to see in a lot of markets, and the Bay Area is a great one in the U.S., where companies are doing new things with industrial space. We have a lease with an occupier that's building robots in the Bay Area. That demand for
Hmm.
robotic or advanced manufacturing, that didn't exist 6 months ago. Um,
Yeah.
the data centers, it's, the example I gave in Germany, that's kind of the basic level of sort of, converting industrial to data centers. A lot of people have done that. We've had success doing that. But the next thing is actually thinking about industrial around data centers, because a lot of the hyperscalers and operators are starting to sign long-term leases around their industrial portfolio in order to provide for, quick logistics for their racks and their servers and what they need to drive their data centers. And so again, that's a new demand cohort that didn't exist before
Yeah.
this kind of AI revolution. So I think for our asset managers to be on the forefront of where the demand is historically been, but also where it's coming from now, allows them to react quickly. So I know I took your question from what is technology doing for the actual job of asset management, but it impacts their job, but it also impacts how they add value to the asset.
Yeah, no, and I think that that's again great context. Just I think that's why I said at the beginning it was like it's so focused on just that property management. At least the conversations we get a lot is just more kind of the day-to-day property level. So I think that is a really good example that you shared there. So, what insights do you have for investors about asset management? And again, kind of the backdrop to this whole series, a lot of it comes from investors trying to understand as they're reading these research reports, um, okay, well, what does it mean that you're doing active asset management? So, what kind of insights do you have for investors as they're doing their due diligence, as they're evaluating fund managers? Just kind of some thoughts from an investor perspective on what kind of questions to ask, things to look for.
Yeah, that's really a great question, Chase. And if I could be so bold to provide some advice, I would suggest, if I was sitting in the LP or the investor chair, first of all, I would really view asset management as the primary driver of value realization. Underwriting sets the framework. Fund management obviously determines where to deploy the capital. Then underwriting sets the framework for those investments. But ultimate performance in this cycle point relies upon asset management. So
Yeah.
the questions, if we were a LP, really one of the first questions I would ask after sort of the fund management is, how is your asset management team organized? You know, is your platform connected globally and also embedded locally? So do you understand the local markets, but can you share best practices and pattern recognition globally?
Hmm.
And that's unusual, but if you can find firms that can do that, you've got a leg up on your competition. Again, local and global. And you know, how do best practices and pattern recognition, how does that actually get transmitted? How does that actually work? It's one thing to say it, but how does it actually work in practice at the local level? So that's number one. You know, how do you organize yourself?
Hmm.
You know, I would also ask, how deeply is asset management involved in the underwriting and the due diligence? And how is asset management enabled to challenge CapEx assumptions, leasing assumptions, OpEx assumptions? You want to work as an LP, you want to work with firms that deeply embed asset management into the investment decision making, because if you're not, you're losing a huge source of information. And then, you know, this is not sexy, but I would also say investors should really understand how asset managers think about capital planning, how they think about
Yeah.
return on investment in CapEx. I mean, these are the types of things that if we were talking 10 years ago, may not have been as front and center, but every dollar that's spent at an asset needs to earn a rate of return that's accretive on the overall investment. And what is the process for CapEx approvals within the organization? Those would be three questions that I would start with. If I was assessing, you know, a new manager and thinking about, you know, providing them with precious capital, how are they going to manage it and add value at the asset level?
Yeah, and I do think that one of the things we've continued to try to dig into is going back to the investment committee as far as you can have this underwriting, you can go through and like this deal, but looking at an asset manager role coming in, who's going to execute that business plan? I mean, again, these are all assumptions we had. Again, part of the reason we wanted to do this is just how embedded is that function within the investment committee and making those decisions, providing guidance on, hey, we can't do what you're saying, basically. I mean, maybe oversimplifying it, but just from the understanding of a lot of assumptions go into generating these returns, selling the properties at a certain time, but those people that in between are pretty critical. So that's good as your number two is that kind of how embedded are they to make sure that the business plan can be executed. Um,
Yeah, exactly. I mean, I hope that you're not just interviewing, you know, C-suite people. I'm sure you're also interviewing, you know, asset managers that are on the ground doing the work because when I travel the world, you know, I'm meeting with our asset managers and really trying to understand how they're thinking about driving value, and that then can come back and inform, you know, our investment decisions. I think your listeners would love to just hear from some people that are actually doing the
yeah.
work on a day-to-day basis. It's great work and it's work that's critically important and it's just becoming more and more important in our industry.
Yeah. No, and we do have a pretty good mix of kind of boots on the ground, C-suite, trying to get these different perspectives, different property types. And I will say, I think we've been pleasantly surprised. Again, an assumption would be like, well, of course, they have to be part of this investment process if they're going to be executing it. And it has kind of proven to be the case. So whether that's just a function of the last couple of years or that's been the last 15, 20 years, that's something we're trying to dig into is it just something you brought these guys in the last couple of years as rates went up or has it always been a function? So
Yeah, I mean, I can speak for Hines, and I'm, you know, being very transparent. I mean, we've always had boots on the ground, and you know, our boots and brains are one of our core differentiators. But really formalizing the job family of asset management
yeah,
and really, you know, recruiting people, training people, growing people within that job family within Hines, and then embedding them earlier in the decision making. You know, it's relatively new. I mean, you know, in the decade before, when again we had a lot of beta tailwinds, we always focused on adding value at the local level. That's who Hines is. That's what we've always
Yeah.
done. But actually formalizing that has been it's been new for us, and it's been something that I've got a leader in Europe, a leader in Asia Pacific, and a leader in the Americas, and the teams beneath them. These are people that this is their ambition, is to work for a large scale global investment manager who's driving value at the asset level, and they want to see their career growth within asset management. That's also a change in our industry that I think some people would have said, well, I'll do asset management for a time, but I really want to do leasing, or I really want to do financing, or I
Yeah.
want to do development. At least within our organization, the asset management job family is one of the most important job families, and we're seeing people come into the firm for that and growing their careers in that, which is an exciting evolution for the industry.
Yeah. Well, and I mean, we've thought about kind of the ripple effects of even doing this, and we have kind of joked that again, going to universities, there's so many people maybe semi-retired in this industry. They're now teaching at different universities. This is one of those things where going to people new to the industry that have maybe just had in their head they want to be a deal person. And it's like, no, I mean, this is a path of increased importance, especially in this market. So yeah, hopefully we can drive more people into that job family.
Yeah. Well, I do think, no one knows ultimately kind of the direction of AI, and I tend to be an optimist on sort of the overall economic growth that will come from AI. But I also think, we have a term, and we use it a lot with all of our investment types. But I think about self-storage in an asset class that we're deeply focused on. We talk about different dials, different
Yeah.
ways to add value from different things, whether it be signage, or whether it be outdoor industrial outdoor storage, or whether it be driverless cars that are parking there to ultimately to go out and serve their customers. These are dials, all different dials of ways to add value. And when I think about the best asset managers, it's hard for me to think that they will be fundamentally displaced by AI, because
Yeah.
what will be provided to them is lots of information, lots of pattern recognition, but ultimately the ability to identify and see dials that they can turn to incrementally and marginally add value to the investment. That's a uniquely human aspect, and it maybe it feels like too big of a leap for me to think that that expertise and that ability to take all those inputs and ultimately make decisions on where to dial and where not to dial. Like that's a uniquely human dynamic that comes only from a lot of experience, that's informed by data, but it comes
Yeah.
from a lot of experience. So I'm pretty bullish on the long-term career trajectory of asset managers.
Yeah. Well, and to your point, I mean, the analogy I keep hearing is as far as the leap of what AI will provide is it's more akin to the leap from a screwdriver to a power drill. That you still need someone to hold it and do it, but maybe you do need two people with a power drill versus five with a handheld.
Hmm.
So that's been something I've kind of looked at as far as just how big is this leap from that example versus it's going to change the world and it's all robots. And so that's something I look at too, is just I think it's just going to give people more tools to do their
Yeah,
job more efficiently.
I think that's
Um,
right. I think that's right, Chase.
so this is last question. So what are your expectations and outlook for asset management in the year ahead? And maybe you can even look beyond just the current year, just maybe the next couple of years. What are your expectations, outlook?
Well, I think the last couple of years have been defined by uncertainty, and
Yeah.
that term's, overused, but it continues to be uncertain, just given all the changes that are happening geopolitically, and given the changes that are happening from a capital markets and a demographic standpoint, and that's global. That's in,
Yeah.
all of our 30 markets. So I think asset managers really being on the forefront of thinking about, amidst all that uncertainty, how do I drive alpha at the asset level? And I think that's, combining. I think the best asset managers over the next couple of years will really start to harness the use of advanced data tools, but then also overlay that with getting much, much deeper in the local markets and the relationship with the occupiers. So
Hmm.
I think we're in for a really a step function in terms of the sophistication of the use of technology, but we're also in for a step function of the actual human engagement with the occupiers. And if you bring those two things together, that's going to be a great career opportunity for people. It's going to add a lot of value to for our investors and our investments. And I think it's a really exciting change. And those people that can use both sides of their brain,
Yeah.
they can use the right side with the engagement with people and human connection and understanding occupiers' desires and understanding what the real estate can do to meet their objectives, but then also use their left side of their brain to really deeply use the data to back up their capex decisions and their recommendations on operating expenses and all of that. Those will be the people that take asset management to the next level, and I'm pretty excited to see that evolution, and hopefully Hines is a leader in that front.
Yeah. Well, I would say, layering onto that, one thing we've continued to hear, even at our conference in January, was just this being a market, going back to the beginning, kind of the previous 15 years, going up to rates being increased, it being more of a capital markets game. Now it's kind of getting back to more of the real estate, asset management, all those kind of things. Um, I think there's an excitement amongst the real estate people that it's like, okay, it's now coming back to us as far as like we actually have to manage these properties. It's no longer just a capital markets game. Did you get a good price? Are you selling at a good market? So I think that's an area where we're starting to see maybe getting out of those stages of grief since rates
Yes.
went up. It's like getting to acceptance and just being excited for the years ahead that it's okay, we're getting back to just being about the real estate, improving NOI, managing these assets, and just doing what we can and within what we can control. So, no, I think I'm definitely optimistic, but it's within reason for sure. But no, I want to thank you, Steve, for taking the time. Again, know you're busy, know you're doing a lot of travel, but appreciate you taking the time to just share more about asset management from the Hines perspective with all the people you're talking to. So thank you. And yeah, we'll hope to maybe do a follow-up to this maybe at the end of the year to see where everything's at.
Well, thanks, Chase. Thanks for the conversation. I really enjoyed chatting with you, and thanks to everything that you're doing and IREI is doing. And I know I speak on behalf of our entire asset management business globally. We're really thrilled that IREI is taking this deep interest in how to create value at the local level and celebrating the asset management job family. So thank you.
Yeah, we're happy to do it. Well, have a good rest of your day and safe travels your next stop.
Okay, Chase. Thanks again. Bye.
Thank you.